Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we reclaimed the point of control and did not retrace so far beneath it and are starting to go higher. How much higher is this drift going to take us into this vector candle to the downside slash bounce off the 236 of this diagonal pitch fan? We've had price action in since January. It's anyone's guess. Let's go ahead and look at High Block Capital to take a look at the insights of the liquidity. What is that exactly? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those stop losses and crispy characters lie in wait. So let's go do that now on the 1 minute time frame. Shout out to everyone here or who may be here in the future. All right, so we were talking about a potential retrace into some of this liquidity down below, particularly 25,718, which they did not go to exactly, but they did get the partner in crime there, and they did not go below to the 25,488 region, suggesting they'll come back to it at a later juncture, inducing some more 100x in here and taking out some of the 100xers at 26,122 and bouncing off them into the shorts. No notable characters to be liquidated just yet as we expand our vision to the higher time frame external liquidity pools. So on the 7-day you have this, let me switch this to max liquidity. So on the higher time frame of the 7-day you do have this 10 billion up to the 26.8 region. I would be surprised if we do not get drawn up to that region on the 7-day time frame. Let's go ahead and take a look at the monthly. The monthly also has that thick band of 20 billion up in the 26.8 region. Beyond that starts to taper slightly, and you have a gap all the way up to the 28.6 region. Do we get a draw all the way up to that region with the double digits up in the 28.5? I don't know, but let's go ahead and expand our vision to the 3 month and 6 month. The 3 month and the 6 month having a draw to the downside with $50 billion plus pools down below. On the 6 month time frame, those accumulate up to the $170 billion region amount rather. And then if you expand to the highest time frame, you have 248 billion down at 23.6 and the 600 billion up in the 33.2 region. I would have expected that they come back to the 23.6 at least and knock out that 248 billion, get everyone ultra bearish, and then come to the 33.2. I don't see us going higher than recovery of the vector within reason, liquidity speaking. Now with that liquidity in mind, let's go to the math and the momentum and save yourselves the trouble of going through the fluff that other YouTubers do by going quickly. So all right, so we were talking last time about retracing down into this 618. We did not get that retrace. What we did rather was, oops, let me see. There was a shallow retrace down to the 382 region, consolidated at the 382, burst up above. You would have been able to adjust this trend-based fib level to the rise retrace idea, the 236 holding at 26,150. If it holds, chances are you could be coming up above to the 0.65 or the 706 or the 786 of that region. The 786 also coinciding with a 236 of a bearish trend-based fib and a liquidity pool we had at 27k. So coming up to that 27k region, looking more likely than not. We are on Thursday midweek reversal, so be aware of that. We could come up to this region, reject sharply, and come to the downside. Let's go ahead and throw on the momentum and say what's up. Boom, heads up display on. Link in the description for more, momentummaster.info. Scroll down features, toggle everything on all of the components, including the rocket ships, as it peeled out at Bitcoin's bottom when a lot of prominent streamers were bearish. And also we had this never before seen formula which monitors 7 time frames with the rocket ships. Most notably in the last few days, we had the rocket ship on Monday of last week, and we started to Monday of this week rather, as we dropped down, and then we started to peel out. We had that projection for you as the baselines crossed up on the hourly. What does that all mean? You can read about the baselines and everything there, and the stochastic array. Okay, so let's go ahead and make our descent through the time frames. Yesterday we had a nice trading session with NASDAQ live. Go ahead and check it out. We had like basically one stop out of a tight stop and then followed the burst thereafter to redeem it and then some, but we had like maybe 4 out of 5 trades go by. If you're looking to diversify outside of the realm of Bitcoin, you would be thinking about getting funded through NASDAQ futures, and watch us as we do that live, document the entire journey. So this 27K would also coincide with the outskirts of this downward sloping cloud on the trend cloud of the 1 day of the daily. So getting up to this region and seeing what type of rejection may ensue. We did not see any conviction to the volume on this last day here on Wednesday. There was basically just sideways motion, which means that Thursday could play both sides here and go up to come down sharply. Beware of that. KD lines expressing ambiguity here at the 50 level on the stochastic RSI. The money flow beneath the RSI suggesting a little bit of a wind-up pitch to the upside that could still ensue. Rising sun event on the daily time frame as well. A lot of sideways on the Williams, but in a good position to continue higher on the daily. We were talking about the 3-day and the 5-day closing, and they did close last daily candle close, and they reset more of the stochastic data. Did not really go anywhere on the 5-day, still in a good pocket. 3-day also in a good pocket, starting to gain some momentum steam. Possible cross-up event on the 3-day time frame. We talked about the cross-down event back in July 24th before that whole suppression occurred. So are we going to see the opposite ensue on the 3-day? Interesting little tidbit on the 3-day baseline cross-up event. Could be inbound. We'll look for that to close over the next 2 days to see if that holds the baselines or not. That's a slow, subtle percolator. On the 22-hour time frame, we did close a 22-hour candle above the cloud. Interesting to note, are we starting to reclaim the cloud and see a potential cross up of these baselines hold as we head even higher? KD lines on the stochastic getting overbought here, but the momentum of the Williams just getting started of that rising sun event potential. If we go to the 12-hour time frame getting a little bit exhausted here in the overbought region of the KD lines. The Williams showing you could still have some legs here as the average still wants to drift higher before you sharply reverse. Not to say that that doesn't happen where you sharply reverse. This did happen back August 31st where you had this sharp reversal, so beware of that. If we get up to this region, you could have just a sudden drop similar to August 31st. But in general, if it is a sustainable event, this average will drift a little bit higher, causing double tops and triple tops alongside the Williams. So the Williams at a region of rejection, a rejection point, if you will, and the overbought region on the KD lines. Look out for the 12-hour time frame and what it's going to do in the next 12 hours. 6-hour time frame, also getting a double top scenario. KD lines drifting. This is what you would want to see on the 12-hour ensue. Basically reaching up into the overbought regions. Could get a little bit higher, but when you're slightly bearish, they reject off the overbought quite quickly. Will it reach up into the red region on the Williams or not? Will you get that suppression of the overbought potential as well on the 6-hour? You are running out of steam on these subtle support time frames. 4-hour did get that double top we were talking about off the cloud. Nonetheless, if you look at the cloud bounce here, we bounced off the cloud of the 4 hour, started to shift it in our favor, and that was your slight beneath the 382 bounce off the 4 hour cloud. Baselines holding and crossing up. The separation between the baselines insinuating that this could keep going higher. If you start to fail this baseline, you could start to turn this down to turn into a cross down event on the 4 hour time frame. 4 hour time frame KD lines, money flow starting to flow above the RSI, starting to suggest slight fatigue here. Going to the hourly ambiguously looking to hold at 50, although we would like to see a deeper reset of that time frame of the hourly. The cloud on the hourly starting to thin slightly. You've got a previous touch around 4 a.m. my time. Super trend of the bullish nature is holding. Will you hold this 236 level and the 382 that we consolidated off of here? Hourly time frame at the 54 level. Are you going to get a suppression off of those fatigued subtle support of the medium time frames of the hour, of the 4 hour, 6 and 12, or get a push up from these lower time frames? 15-minute looking to reset here alongside the hourly. If we look at the liquidity now, this is where the nitty-gritty begins to unfold. So you have a $7 billion imbalance to longs. So retracing into some of the longs would not be absurd to think. Once again, if they are going to have a sustainable move to the upside, then the drift would not be the clue. It would be more of a retrace beyond this shallow one and go more into the equilibrium and or the golden pocket down here at 25.5 region. So the shallow retrace is a very rare one, but that's what we did as of yesterday. But essentially consolidation and holding as of this moment the 236 of this rise retrace level. And yeah, so where could we be going? The draw could be up to 27k and a reversal. This would be midweek reversal. So you're getting, realistically, what are you going to have possibly ensue in the next 12 to 24 hours? Well, first and foremost, you're going to see if your 15-minute and hourly hold, how far back do you retrace into this? Do you come back into some of these 100xers down below? There's a sell pool at 25,917 that you could come down into, 25,917. Would put you down in this region of that candle replaying here. Basically the shallow level here that we bounced off of. Do we come and sweep that and see what happens? Going into the Asia level. So the higher time frame pool, once again on the 7-day, where that draw could be happening, up in the 26.8 region. 26.8 would have you up in this level here. Do we go to that 706 of the impulse drop to the downside here? We got a previous reaction off the 618 here as we burst up to that 618. A sustainable move would be something that goes from 618 to 618 and then continues. So if it came down to here and bounced up to that level, that would be a healthier idea to think about if it was going to go up to this higher level. If not, then you're basically going to possibly just fatigue out off the shallow pools at the 706 and then drop down. So the 15-minute coming down here in a manner leading into the close, and hourly ambiguity also insinuating what exactly in terms of whether you're going to hard reset the hourly or not. Does it get that suppression of the 4 and the 6? 4 hour starting to mellow out here for a way. The 6 hour time frame cloud is holding. Do we get a last little bit of spurt of energy on the subtle support of the 12 and the 6 hour leading into London? So all right, so if it holds this range leading into the daily candle close, and then you get a run up within the noon time frame leading into the pools of Asia, the baton pass to London would occur around the 4 hour candle close, and possibly you get up to this region and fatigue if you hold this 236. If you break the 236, if you break this 236, you could be coming down real quick to these regions, and the reversal could be inbound, and you could look for a reaction at the 25.542. Basically at an ambiguous point. So it could go one of two ways, and the one level we're looking at right now is the 236 at 26.150. 26.150 does not really have much liquidity right here, so we're basically determining whether they're going to continue the draw to the upside to that 26.8 region and knock out some more shorts before reversing potentially, or are they going to just start retracing now? Not seeing as clear of a signal as we saw back here with the rockets, obviously. So you just chart your path on the 236 current. Impulse retrace insinuates the 236 at the 26.150 being your healthy monitor for continuation or not. So far over the last 12 hours we have held that 236. So if we hold the 26.150 region, the draw could be to the 26.8. If you start to break the 236 and start to have candles, particularly 4 hour and below the 1 hour start to close beneath that, then you could be seeing a break in this cloud. The one thing on the hourly time frame is this cloud curvature suggesting that you could potentially break and continue lower. So watching what happens at the cloud, if it gets to that thinning point and this starts to come down and get suppressed by the 4 hour over the next 12 hours. It's all what's happening right here and now at the 26.150 region. Can it hold or not? Basically off this cloud is your make or break scenario around the 26.131. How do candles close around this region? And do you have a reaction off of the 618 or not? So we did experience the draws here, not seeing the clear signal as of this moment in time. We were talking about back here retracing, and it did give a little bit of a retrace bounce off the cloud. So are we going to see this continuation bounce or break down and head lower? So essentially two scenarios here as the ambiguity of the 4, 6, 12 potential fatigue sets in and cascades to suppress the hourly or not. So how does the hourly close and or break this 50 line and come beneath this, or continue higher with the jump bounce off of the exponential of the Williams here? we determined that the external pools do have that draw up to the 26.8 in double digits to 20 billion on the monthly time frame before retracing into some of these millions below on the minute time frame. That's all the time I have for you guys. Thank you for stopping on in. That's my story and I'm sticking to it. Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you for the NQ live trading session later today for New York Open, and we'll catch you later. Peace.